Because they lack financial literacy, many young adults make poor financial decisions. Learning the principles of personal finance is the key to reaching your objectives and accumulating wealth over time. The majority of financial issues may be resolved by understanding how money functions and using it as a tool to help you succeed. Personal finance does not require a PhD. It merely serves as a checklist that must be followed. Your financial planning can be done automatically if you abide by the following recommendations that I will show you in this video. The first recommendation is budgeting. As already mentioned in one of our previous videos, creating a budget is essential to managing your money effectively. You can plan your financial spending by using a budget. Identify your income and expenses, and allocate your funds accordingly. Having a budget guarantees that you will always have enough money for the things you need and value. Maintaining a budget or spending plan will also keep you out of debt or help you work your way out of debt if you are currently in debt. 2. Debt repayment strategy. When you owe money to someone, you are in debt. Owing money is not always a terrible thing. Having a repayment strategy is the greatest method to avoid debt problems. That starts with not taking on too much debt in the first place. Do not incur more debt than you can manage. When you have debt that you are unable to repay, it is bad. If you are unable to repay the loan, you can run into legal issues. Even while it may only have taken a few months of unemployment or excessive spending to accumulate debt, it will probably take much longer to pay it off. It is crucial to stick to a strategy and not let setbacks discourage you. Always keep in mind that progressing toward a zero balance takes time. 3. Savings. Income is not the same as savings. Making a lot of money is not the same thing as being wealthy, since your net worth is more significant than your income. A large income does not necessarily equate to wealth, and a low income does not necessarily equate to poverty. Not how much you spend, but how much of your money you set aside, is what counts. Achieving financial stability requires saving money for emergencies, retirement, and other objectives. Every month, set aside some of your money for savings. The best investment decision you can make is setting a high savings rate, because it gives you a significant margin of safety in life. 4. Investing. Investing is a successful approach to use your money and possibly build wealth. Your long-term financial goals may be realized with the aid of an investment portfolio. It can also create a nest egg for your retirement, pay off your mortgage early, or fund your kids' further education. However, it is crucial to understand the risks and potential rewards of various types of investments. A variety of investments, such as stocks, bonds, and real estate, can give you a consistent income that's frequently larger than the rate of inflation. If you intend to invest for a long time, you might want to consider private equity, hazardous sectors like developing markets, or funds with growth potential where your money can withstand temporary market fluctuations. You can adjust how you invest to meet your needs if your financial situation changes over time. 5. Planning for retirement. In order to achieve financial security in your later years, planning for retirement is vital. As soon as you can, you should begin making retirement plans. Early investment gives your money more time to grow and generate bigger returns. You can do this to maintain your financial readiness for your post-retirement needs. Your post-retirement goals will determine how much money you need to save. The financial load on your children, spouse, and family is reduced when the appropriate form of retirement planning is in place. This is due to the fact that they won't have to worry about paying for your expenses to ensure that you're taken care of. 6. Insurance. In the event of accidents, sickness, or natural disasters, insurance can protect you and your possessions. Make sure your insurance coverage is sufficient for your needs. Anyone wishing to safeguard their family, possessions, and oneself from financial danger or losses will benefit from insurance plans. Insurance plans will assist you in covering the costs of unexpected medical expenses, hospital stays, contracting illnesses and their associated treatments, and future medical care needs. One of the most crucial factors to consider when selecting insurance is the premium. The continuing cost of maintaining an insurance policy is known as the premium. Within the constraints of your policy, you can choose a different timetable or pay your entire premium up front. 7. Taxes are a huge factor. Taxes are important. Taxes are used to provide basic and social amenities like roads, power, clean water, an efficient and economical health system. They are also used for the provision of high-quality education in addition to paying the wages of public employees and purchasing security weaponry to defend people and property. You can reduce your tax liability and save money by utilizing tax incentives and understanding the tax rules. You can reduce your tax obligation by increasing your retirement contributions, participating in employer-sponsored plans, taking advantage of losses, and making charitable donations. Utilize all available tax benefits, and always be aware of your own tax status. Using as many tax-deferred savings options as you can are among the greatest layups in this area. When investing in taxable accounts, limit your trading to a minimum to avoid paying more in short-term capital gains taxes. 8. Credit scores. Your credit score is a reflection of your creditworthiness and has an effect on whether you qualify for credit cards or loans. To maintain a high credit score, pay your bills on time and keep your credit utilization low. Monitoring your credit is essential to your success and financial well-being. You can determine if your credit is in good standing by checking your credit report once a year. Contact the credit reporting agency or the account provider if you find any mistakes on your credit report. Send a formal disagreement via certified mail if necessary. You can prevent identity theft, incorrect addresses, misspelled names, and other mistakes that could lower your credit score by regularly reviewing your credit report. To ensure you can raise your credit score, correct any errors on your credit report. If you want cheap interest rates on loans like a car loan or a house loan, having good credit is crucial. 9. Financial goals. Make a plan to reach your financial goals after setting them. Having specific goals may keep you motivated and on track, whether you're saving for retirement, paying off debt, or purchasing a home. The funding of your lifestyle, both inside and outside of the office, depends on your financial ambitions. Financial goals should be broken down into short, medium, and long-term objectives. It's beneficial in the short term to pay down debt, open a savings account, and develop a budget that works with your lifestyle. As a result of knowing what you're aiming for, financial goals make it simpler for you to make compromises or stay within your budget. They help you in maintaining long-term focus. Financial objectives provide you direction and drive, and they can help you maintain your investment discipline. 10. Financial literacy. Continuously educate yourself about personal finance to increase your understanding and make wise decisions. Read books, articles, and blogs. Think about enrolling in online courses. There are innumerable books on personal finance available. All high schools and colleges should teach this material, but they don't. Nobody will be more interested in your financial choices than you. Spend some time, money, and effort on improving yourself. It is the best investment you can make. And speak with a financial advisor if necessary. Well, that's all we have for you today. If you haven't already subscribed to this channel, please kindly do so in order for you to be notified when we post new videos of this nature. Thanks for watching.